Good day, everyone. My name is Bob Culler. I'm Senior Vice President for Marketing for FastTrack Services and Solutions, the sponsor for today's webinar, How to Release Excess Waiver of Premium Reserves to Profits. FastTrack specializes in helping the insurance industry with disability, return to work, and waiver of premium risk management solutions that enable both financial and operational efficiencies. We are pleased to have Carl Capato, who is our first Vice President of Risk Management Strategic Partnerships, as our speaker today. Before I turn it over to Carl, just a couple of housekeeping notes. You may type in any question you have anytime during the session in the Q&A box located on the right-hand side of your screen. Carl will answer your questions during the Q&A session at the conclusion of the presentation, probably at 12:45 or so is what we're planning. Please mute your phones during the presentation as this will prevent distractions for both the audience and the speaker. You could unmute it, obviously, during the Q&A session. If you think of another question after the presentation today, please submit them to Carl at the email address shown at the final slide, and he will respond directly back to you. At the conclusion of the webinar, a brief 3-question survey will be presented to the online audience to gauge your satisfaction with the webinar content and presentation. We'd greatly appreciate your input. And finally, we will be posting a copy of both the slides and the accompanying audio from today's presentation on our website, and we'll email everyone with the exact URL of this within the next 24 hours. Thank you for attending, and without further ado, here is Carl.
Good morning. We only accept 5s on the survey, by the way. I'd like to personally thank you for being part of FastTrack's second webinar. Our overall goal in conducting these series of webinars are to continue to educate and raise awareness on the impact waiver of premium claims are having on actuary reserves. The agenda for today's educational session will provide a high-level understanding of the 3 actuary reserve components that waiver claims activity impact the most, why waiver liabilities are undervalued and, to be frank, often forgotten about, how treating a waiver claim as if it was a DI claim will provide an actuary reserve savings, how by implementing a best practice process would establish an objective adjudication decision and process in comparison to a subjective adjudication decision and process, and lastly, the potential financial reserve impact a best practice process could obtain. And as Bob mentioned, we will close today with a short Q&A session. So even though you could submit questions as we're pushing through the session here, we'll address as many of those as Bob indicated in the Q&A session. At a very high level, when a waiver claim is submitted for processing and approved, whether it be a new or recertified claim, your actuary team is setting aside reserve dollars. Typically, there are 3 sets of reserve dollars. 1, disability life reserves, the second being mortality life reserves, and then the third being premium liability dollars. Often, many life insurance executives outside of actuary are not looking closely at the waiver liabilities, but yet waiver liabilities continue to grow annually. You see here on this side, since 2002, a 54% increase in disability life reserves, also known as DLR. You also see an increase in policyholders that have waiver riders of 3.3%, and finally an increase in active life reserves, also known as ALR, of 64%. ALR reserves are set aside by the actuary team as soon as a policy is open, and we bring this up because of a direct correlation of higher ALRs. By having higher ALRs, we ultimately means you're going to have higher DLRs. In short, more claims are forthcoming. In summary, if you were to add up DLR on group and individual policies, this DRL reserve totals to be $16 billion of a total ARL of $1.3 trillion. So as you can imagine, since DRL represents about 1% of total reserves, often it is undervalued, and given this, not a high priority. The impact of undervaluing DLR on waiver life claims usually has a rippling negative effect on management's decision to make certain the waiver process and the technology being utilized is up to date and effective. Often waiver technology is dated, and many of the necessary steps of processing additional waiver claim are done annually and often in a subjective way.
It's muted.
Please mute your lines on your side. Thank you so much. Just getting some feedback from attendees there. We will drill down further on during our session today on these topics that you see here. But carriers are starting to look closely at all reserves, including waiver reserves, given the diminishing revenue from a growth and profit perspective, and are establishing initiatives to find ways to improve bottom line profit margins. Taking it one step further, here we are featuring just one carrier. Of course, I cannot mention the name, but given their 2012 annual public filing and looking at their Exhibit 1 and 5 spreadsheets, it tells us that their DLR totals to be $78 million, MRL totals to be $38 billion, their face amount totals to be $46 billion, and they have 177,000 policyholders that have a waiver of premium benefit tied into their policy. Given these numbers, every time an approval or denial of a waiver of premium claim decision occurs, it is impacting their actuary reserve numbers on average by $43,684. But in reality, their waiver exposure is even slightly higher, since PL, premium liabilities, have not been factored in, since PL is not public data. So that leads us to best practice guidelines, which can be summarized in four categories. Four categories that you see here are people, process, technology, and financial. It is by enhancing a traditional waiver of premium process and moving it to a best practice process that the fourth area, which always tends to raise a few eyebrows, the financial side, is impacted in a favorable way. Again, we're going to dive a little deeper into each of these four categories as we progress through this education session by comparing a traditional waiver of premium process to a best practice process. Allow me to paint a picture here. Let's pretend a new waiver claim comes into our operations today. After the claim passes our eligibility checks, such as to confirm that it is an active policyholder with a disability rider, or the policyholder is the policyholder is within the contestability period, the next key and very important step of the process is collecting medical information in order to validate the claimant's proposed disability condition. Typically, the traditional waiver of premium process has the claimant and the claimant's attending physician, sometimes we'll know them by APs, completing an APS statement. A partial example of an APS is shown on this slide, on the left-hand side of the slide. And take note that the APS often contains questions that tend to be what I call adjudicated in nature. And more importantly, has no formal space to prompt an AP, once more an attendant physician, to carefully define the restrictions and limitations associated with that claimant's disability. It is this APS statement that our specialists are using to adjudicate a claim and often handcuffs the specialist into making a subjective decision given the design of a traditional APS and the credibility the specialist places on the responses provided by the AP. The fact of the matter is APs have little to no knowledge on the physical aspects of performing the given tasks associated with a job, such as job requirements related to driving, standing, walking, sitting, lifting, environmental conditions, and so forth. On the other hand, the best practice process suggests an enhancement to the traditional APS to include what is called in the disability vertical a physical capacity form. This form, you see an example of this here on the left-hand side of slide number 11 here. This form consists of 42 restrictions and limitation data points, 168 data values associated with those 42 restrictions and limitation data points, and through the AP completing this detailed RNL, utilizing an easy checkbox-driven response, it now positions our specialists to make an informed, objective adjudication decision, and also creates a consistent way to collect restrictions and limitations on all of our claims. Under the traditional process, after the medical notes are provided by the AP, the specialist usually will process and adjudicate the claim based solely on the AP responses and notes, which, as a reminder from slide 10, usually has little to no restrictions and limitations, and adjudicated in nature responses to closed-ended questions such as, is this person disabled? If the specialist is thinking of possibly denying a claim, and in conjunction with this denial needs to identify other occupations in line with the claimant's pre-disability job, usually the specialist's vocational experience, if any, has them only familiar with 25 to 30 other types of occupations and no real understanding of the physical tasks associated with doing these jobs, and no way to tie back medical notes or adjudicated in nature types of responses, which unfortunately more times than not leads to a claim approval when often it could be potentially a claim denial. We remind you that a claim approval or denial is impacting your reserves. An approval adds to your reserves, and on the other hand, a denial reduces your reserves. Using this information on using the information on slide 7, which is the carrier that we were highlighting here, every time they make an approval or potentially a denial decision, it's impacting their reserves by, on average, by $43,000 per claim. Under the best practice process, the detailed R&Ls, restrictions and limitations, are collected through the AP, completing the revised APS/PCF, physical capabilities form, once more. Those R&Ls are entered into the best practice process and automatically compared to 1,130 U.S. Department of Labor ONET occupations from an ONAC capacity, from a related OC capacity, and finally from an OC capacity. The best practice takes it one step further by assigning U.S. Department of Labor job zones to every possible occupation match in line with the claimant's restrictions and limitations in order to compare back to the claimant's pre-disability job/job zones associated with that job. As you see here, there are 5 job zones that address T, E, and E conditions. T, E, and E is training, education, and experience conditions that often need to be factored in from a policy definition perspective, especially when a change of definition occurs from ONOC to ANIOC. So depending upon whether you're on the group side of life or the individual side of life, especially on the individual side, often there's a 24-month ONOC period before it moves to an ANIOC period. And these job zones are being factored in to those occupational matches. The traditional process usually has the specialists taking policy definitions into consideration manually. Those policy definitions are in line with what was mentioned on the previous slides, ONOC, ANIOC, etc. Often, a carrier has several blocks of claims with different policy definitions. If a carrier is providing DI policies, often the life waiver policies are being managed back to DI policy definitions and not life waiver definitions on concurrent claims, meaning your policyholder has with you a DI, a disability insurance policy, as well as a life insurance policy. That's what we mean when we say concurrent claims. Additionally, individual open block claims that have already exceeded ONOC time frame are still being processed back to ONOC definitions instead of ANIOC definitions. It goes back to what I was saying earlier, where traditionally you may have a 24-month ONOC and then it moves into an ANIOC. What we see happening out there is those claims are unfortunately still being processed underneath the ONOC definition, even though they have reached the ANIOC change of definition. The best practice process helps the specialists manage claimant activity back to policy definitions in line with multiple blocks by automating business conditions associated with policy definitions and also utilizing the advanced filtering functionality to zero in on gainful conditions. An occupational matching report is generated from the best practice process that clearly defines ONOC opportunities, if any, related opportunities, if any, and lastly, ANIOC opportunities, if any, and is used by the specialists to help them make an informed adjudication decision for both your new as well as your recertified claims. The best practice process incorporates automated notification letters that provides the necessary notifications to claimants on the status of their claim. The letters have state-specific language when necessary, and also gives the ability to insert occupational matches that would be in line with the claimant's pre-disability job, as well as the restrictions and limitations associated with the disability that they have. So if you were to summarize the last sequence of slides that I just pushed through and put it into a flow chart, and what you're looking at here on slide 19 represents what we've covered with you once more at a high level. The left-hand side here is a reflection of a traditional waiver of premium process, and the key steps. By all means, there's many other steps that go into processing a waiver of premium claim than what you see here. We're trying to simply isolate the key steps associated with processing a waiver claim, and we've isolated it in really two ways: a traditional process off on the left-hand side in comparison to a best practice process there off on the right-hand side. The best practice process provides values as it relates to utilizing and managing your waiver staff effectively, having a consistent format and more and appropriate data to properly adjudicate claims, and financially provides reserve returns when appropriate. what you're looking at on the next couple slides here is results as it relates to claims that are being processed through this best practice process. And what this is telling us here on this pie chart, the blue represents claims that went through this best practice process, and we were able to identify occupational matches that tied back to their pre-disability occupation, also known as ONOC. We're also able to identify occupational matches related to ONOC that could be met with a reasonable accommodation, which is the red portion of the pie chart here. And then on the other hand, we could not identify occupational matches in the green section that you see here. Next slide, on slide 22, simply covers that on all the claims that have went through this best practice process, 66% of them we were able to identify occupational matches on. 2.9% reasonable and 30% no matches. And the very last slide here, slide 23, really tries to paint a picture here for you of, well, what happens if you were that carrier that we featured earlier in the presentation here, and the carrier had roughly around 3,000 waiver of premium claims, and if we were to take those claims and utilize the best practice process that we covered here at a very high level, and we were able to identify occupational matches on 66% of them, then obviously that number represents occupational matches being found on 2,000 of the 3,000. As it relates to related occupations, which is kind of the next step down, they're occupations that are related to their pre-disability occupation as defined by the Department of Labor. 24% related OCs, or 700 of the 3,000. And then the last category that you see here is ONOC, which means, given their restrictions and limitations, as defined by the attendant physician, and then comparing it back to their pre-disability job, the best practice process identified 17% of them could be potentially doing their own OC, which represents roughly around 500 claims. And if the carrier simply chose to close 10% of those claims, then that's 10% of the 2,000, which is where that number is coming in, the 2,000 ANIOC matches. 10% of that would represent 200 claims. And if we just simply use the average DLR as well as the average MLR that was defined earlier in the presentation here for that one carrier that I mentioned, given their annual filings from Exhibit 1 and 5, their reserve release, the reserves per claim, as I mentioned earlier, is $43,684. Very simply, by taking that number and timesing it against the 206 potential closures there, it could ultimately reduce reserves by the $9 million figure that you see here on the bottom of slide 23. So I know I'm finishing up a little bit sooner than we initially expected, but I'm going to turn this back over to Bob. I'm not sure if there's any questions come in, but I'm going to turn this back over to Bob and have him address next steps here. Bob? Hello, is Bob there? Okay, well, I'll take it from my side. I'm not sure what happened with Bob. Sounds like we have an audio challenge, but anyhow, for those of you that are still here with us on the line, we're going to go ahead and open up for questions at this point. So feel free to ask questions, and I'll do my best to try and respond to those questions. Any questions from the attendees?
Okay, if there's any questions that you could think of afterwards, please send it to Carl.Capato@FastTrackRTW.com, and as I said, we will send you the audio/slide set URL within the next 24 hours. We thank you all for attending, and if you could fill out the three questions that we have survey, I'd appreciate it. Thank you very much, and have a great day, guys.